Welcome back. The debt has found a new level. That's our topic today. I'm Eric Sepanek. This is Damian White, and welcome back to the Gold Spot. All right, so we're going to start today by talking a little bit about it. We're going to do a little Gold Spot reflection, if you would. Last year, we ended the year with one of the biggest debts we had ever seen. And we were talking about where that debt was going to continue to go. We did this spot back December 29, 2023. We wanted to take a little bit of a Gold Spot reflection and show you what we were talking about. This year, if you click below, you will also be able to see all the factors and all the people that we are referencing for this year's. We're looking at about $2,506 in this 2024 prediction when it comes to what all the experts are talking about. So something that I think is very interesting. I think everyone will get a kick out of it if they click below. So I think they should do that.
Well, but when you do that, remember, it's a forecast. It's affected by things like the uncertainty about whether the Fed is going to lower rates or raise rates, world events, the impact on the markets, the emotional impact about that, the impact of the big investors when they come in and out of the market. It's a forecast, so it's not a hard number. Just keep that in mind.
Okay, so then after that, a few weeks later, Damian and I were here, and we were talking a little bit about where we believe gold prices were going to go. Escalating not only because of debt, but because of what was going on with something called cup and handle. This was January 12th, 2024, and I want you to take a look at what we said about this.
We can make forecasts based on other assets, on other chart patterns. This is a really long cup and handle pattern. It's taken all 15 years for this to transpire. So ultimately, the pressure that's being building is going to relate to an explosion of price to the upside. The trigger for that could be a lot of things. It could be world war. It could be the Federal Reserve lowering interest rates during the course of 2024. The gist of the pattern, though, is that buyers and sellers are battling. They've been battling for 15 years. Pressure is building, and price is not going down. When price does not go down, it's telling you one thing: it wants to go up. And so that was going to happen at some point in the future when gold is a slower moving asset. So we've been seeing this transpire for quite a while now. The average analyst estimate on Wall Street right now is about $2,504 approximately, I believe, which in my opinion can be a conservative estimate. These patterns can be very explosive, and they traditionally will follow the similar move of what they did before. If you go back again to the left side of the chart, you're looking at a price that went from $800 or $900 up to about $1,900. Call it a $1,000 move. I personally will look at it and say we probably have about a $1,000 move in our future, which is about 50% move from where we are right now in the 2,000 ballpark range. So I think those analyst estimates are a little bit conservative, but we're going to see how that transpires. I would expect this pattern to resolve in the next course of this year. We're going to start breaking out shortly. And then how long it takes to get to 2,500 or 3,000, I think that'd be a pretty quick move. You know, it could be in 2024 by the end of the year, 2,500, 2,700, 2,800. I would think by the end of 2025, we're at 3,000. That would be my technical analysis.
All right, so the predictions that we had at the beginning of last year was a combination of all the different experts out there. It's listed on our website, but we were predicting around 2,506 in the year of 2024. Well, we've already hit $2,468.80. We're only about $37 away from where we thought it might go. Now, Damian here was one of the guys that predicted where we were going to go with this. Damian, how did we get here? Where's our debt now? And what do you think's going on?
Well, how we got here is exactly what we're talking about. I mean, too much debt is creating this kind of an unstable financial situation for the United States. We're looking at a situation now where our price targets, our initial ones, have basically been met, and we're only halfway through the year. So I think it's basically you can forecast that we have higher prices. Gold is telling us we have higher prices in our future. Back then, I said that the cup and handle formation tends to be one of the most bullish formations on Wall Street, and it predicts, or you're able to somewhat forecast where prices are going to go. We've hit the initial target, or approximately within $30 or $40 of that target, again, halfway through the year. I believe back then we said by maybe the summer of 2025, you're going to be looking at close to $3,000 an ounce in metals. We're well on pace to do that, and at this point, really, we could probably hit that even by the end of the year. I mean, technical analysis is not voodoo. It's just an ability to go back on price history and forecast where it's going to go for the battle of buyers and sellers. We've just passed another benchmark, which is $35 trillion. And there's no end in sight. I mean, we're looking at a lot of other things in our future, geopolitical issues and wars and an election upcoming. All those are going to contribute to higher prices. So gold has been so-called sniffing out this global economic issue and is predicting that prices are going to go much higher from here, and it looks like even on a more rapid pace than we had originally forecasted.
Yeah, 35 trillion. I mean, I think one of the things that we need to keep in mind is there's, once again, it doesn't matter which side of the aisle you're looking on, there's nobody talking about reducing spending. Like, that is the one thing that no one, and even if we said, hey, let's keep on the pace that we're on, figuring out your checks and balances, making people accountable for the money that's being handed out, it's just not there. And now we're watching an election where the poll numbers are showing us we're back into a dead heat race, which, believe that or not, regardless, it's amongst the public eye. So there's a lot of reasons right now to be very concerned about really the dollar as a whole. I mean, can the dollar make it? I mean, you look at Jamie Dimon, you look at Elon Musk, all these guys, the guys that are some of the smartest financial minds in the world are telling you the dollar is an absolute problem, and it is going to be a catastrophe down the road. Where is down the road, Damian?
Well, I mean, we're in a situation now where, unfortunately, our debt has become a runaway freight train. It's really, once the genie is out of the bottle, we can't really, we don't have a revenue issue in the United States. I mean, we're generating almost $5 trillion in revenue by tax receipts, yet our administration, our Congress, they have a spending problem, and they're unable to rein that in. Either candidate is going to have to continue spending. There's too many long-term obligations by the United States. And, you know, if you're coming in, you want to do things like infrastructure spending, you want to rebuild the military. I mean, these are expensive propositions. And so, unfortunately, either candidate that comes in, we could have better control over things like our border and global wars and things like that. But the spending is a situation that's going to continue going until something breaks. And yeah, some very big people in the world, Jamie Dimon and Elon Musk especially, have both said that this is a completely unsustainable path. And I think it was Elon Musk a couple of days ago came out and said that the U.S. is headed for bankruptcy. And I agree with that statement. There's no way to really rein in the spending. And that is another reason to be allocating some, if not a lot, of your investable assets into hard commodities, into gold, the true money, and a store of value to insulate yourself, your portfolio, your family, your savings, everything to insulate it against the destruction and the devaluation of our currency.
Well, I really wish we had better news to talk about when it comes to what's going on with the economy, but it's just not there at this point. It's something that I think that our viewers all need to know. Buy gold and wait. It is going to be an insurance policy that has been working for people, and it will continue to work for people. It is a storage of wealth that can't just disappear. With that being said, I thank you for joining the Gold Spot today. Have a great weekend. If you enjoyed today's Gold Spot, like or subscribe to both our YouTube or our Rumble channels. Also, comment below if you have any questions or if you want to hear us talk about something specific in a future video.